Good day, folks, and welcome to Best Trade Setup. In this video, I'm going to take you through the trades on the 19th of January 2024. What I usually do, I take you through the before and after charts, and then I explain to you why I took the trade. If it worked out, how can we improve? Or if it didn't work out, how can I still improve? So as you can see, stop loss was taken out. Now, one thing I had overlooked was the fact that price had broken to the upside. At this point in time here, this is a breakout structure to the upside. The sells here were valid. These are the notes, what I was looking at. So every time you have confirmed sells or buys, for you to continue entering into that bias, you just need a 3 candle pattern or an M pattern at a resistance level or a support level. I had done this where I saw this resistance level and I saw a 3 candle pattern. But that's only valid if there's no breakout structure to the upside. So hence why that trade did not work out. Feel free to pause the video, go through the notes that I've stated here. One thing is that I won't go through every single thing on my checklist because it might take long for me to finish the video. And I'm trying to keep these videos as short as possible to explain to you why I took the trade. Now, this is the 15-minute time frame where we have a breakout structure on this side and this side. Now, the reason why this is a breakout structure is because I have two bull candles here. It's very important that the second candle doesn't go below this wick. Otherwise, it's not a swing high. So I do have a previous video where I really go into detail as to what I look at to define the swing highs and swing lows, the breakout structures in my charts. Please take the time to go over that video. Now, this is a 5-minute time frame. I'm going to go through it showing why sells were not valid. Now, the purple square is the gap time, no trade zone. In this area, I don't take trades at all because I've noticed that most of the time when I do, trades don't work out. Most of the trades I do take, you will see that they're in the session times, but an hour after the session time or before, I can still take trades depending on how price plays out. Now, as you can see here, we have valid sells coming in all the way here. And then we have price action does a breakout structure and creates a 5-minute order block. Now, if you take a closer look here, right here, on the line chart, it's an M pattern. Remember when I said when the bias has been confirmed, to enter a trade again, you just need a 3 candle pattern or an M pattern. So once this M pattern was completed here, it would give us a 1-to-1 trade. But to each their own. At the end of the day, it's about being consistently profitable and finding what resonates with you. So for me, I usually take a 1-to-1 trade, 1-to-2 trade, and then I call it a day. So here we have price completes an M pattern at support turned resistance, which is enough to enter sells for a 1 RR, but no trade taken since this is a no trade zone at the gap time, the middle hour of the gap time. Now here we have price that broke to the upside. So anything beyond this point needs 6 or 5 confirmations. So that means there aren't any valid sells from this point on based on just an M pattern or a 3 candle pattern. I need to have 5 or 6 confirmations as stated in the previous slide. Feel free to just read through the notes. Now, this is the same chart, but I relabeled it again because if I had put everything in there, it would have been chaotic and pretty much confusing for me to read. Now, here's a chart that's showing buys. What we have here, this line right here on the bigger picture, this is the line I'm talking about. This right here is a break of structure, a very important line because you see prices just doing a whole bunch of consolidation in this area. So please take note of it as I go back down to the 5-minute time frame. This is the line I was talking about right here. So remember that whenever we have price action confirming a trade, in this case a sell, everything before that will not be used in the analysis of price action moving forward. So now since here we had candles lining up for sells, but it's not valid because it's the gap time. I can now use all of these candles after this red line in my analysis moving forward, either for a buy or a sell. So starting from here, price goes all the way here, does all this work right here, and closes back up this level. The same level I was showing you on the 15-minute time frame. So what price action is doing here is a fake out, and with every fake out is a W pattern. And this W pattern is in the form of multiple troughs, right? So right now we have three confirmations. And on the third trough, we have a three candle pattern right here, which also taps into the 5-minute order block that was created when price broke up this point right here, this break of structure. So the way that I've made my trading checklist, I look at all of these little details. Check, 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 and then I take the trade. And now we have price closing above the 20 EMA. In all of this right here, we have in total 4 pin hammers. Now, each two pin hammers is equal to one confirmation. Don't ask me why. That's just how it is. I've noticed this to work through thousands of charts that I've accumulated over the years. So with that in mind, we now have confirmations for buys. So there are a lot of things that I had overlooked when I was taking the sells, as I showed you in the first chart. Now we have the second trade of the day. These are sells. And then I closed right near the low right here. Left price at break even, and price action eventually took out that stop loss at break even. Now the reason why I taken this trade, we see price going below this break of structure point, and that creates a 5-minute order block. Now price comes here at this level as well, which is a point where price broke structure again. Now what we have is price going down here, back up, down here, back up. It's retesting this level. So we have a break and retest in the form of a 3-candle pattern at a 5-minute order block, and also rejecting this quarter level. And then we have a pin hammer right after here. In the previous slide, I did tell you that 2 pin hammers is equals to 1 confirmation. The only exception to that rule is when this pin hammer follows a 3-candle pattern, either formed by 4 candles or 3 candles. As long as a 3-candle pattern and then pin hammer afterwards, that 1 pin hammer is counted as 1 confirmation. All other situations like the previous slides, 2 pin hammers is equals to 1 confirmation. So then we enter the trade right here. You can add an additional position after this point right here. And then, like I said, I go for a 1-to-1 risk to reward, and price did achieve that, and I closed the trade. Also, mind you, this is within the 1 hour after the trading session. So I didn't want to risk leaving it open in case price would not go as far as I had anticipated it to, and just cover the 1-to-1 risk to reward that I had come in for. So the reason why I've taken this trade is because we have 1, 2, 3, 4 confirmations. I need 2 more, and the other 2 come from this point here where price broke through this level, came back and retested it, and then continued going down. So right here we have a break and retest, rejecting off of these numbers, double zeros level, 3-candle pattern, engulfment. 4 plus 4 8 confirmations, that's more than enough to enter the cells here at other cells, as this is a further confirmation for price to go further down. It did cover that 1-to-1 area, and calling it a day for today. So one thing about this trade that I could have improved on was bringing the stop loss all the way up to here, and still aiming for a 1-to-1 risk to reward with price coming all the way down here. Because this is a trade that's taken place in an order block, so the stop loss should be above right here. That is something that I definitely have to keep in mind the next time around. Remember, I'm not claiming to be a guru or a know-it-all, just simply sharing my perspective and my approach to the markets. And as you can see, stop loss above the 5 minute order block area. Trade taken here. Price would have eventually come all the way up here, as you can see, but wouldn't have taken out the stop loss. And price then continued going all the way down to the anticipated take profit level. Also, entries on the pullback for better R&R because we're still maintaining the bullish bias because we do see price here continuing to show us three candle patterns, M patterns, three candle patterns, and no reason at all technically for buys. So this would have been the optimal place to enter a trade where you risk so little to gain a lot. And we do have another entry right here as well. Remember that support level I showed you from the previous slides on the 15-minute time frame? This candle closes below it, therefore completing another multi-top structure right here. Either you get an M pattern, three candle pattern, or a multiple top, and that would make the sell valid. Here's a wider picture, a wider view of the chart. This brings me to the end of my video. Still the habits that will help you improve. Go through your trading journal, keep a trading journal, keep a detailed trading journal. And with that, folks, I'll catch you on the next one. Cheers.